Welcome back, everyone. Monday on the Southwest Freeway, and things are moving along just great. It's nice and warm outside.
Lovely day. Okay, so it's time to start chatting about finances, okay? When it comes to investing and creating long-term stability, sometimes your emotions can get in the way. Things like fear and maybe a bit of greed. So who better to help us navigate these scenarios? finalShakiba of the Shakiba Group.
Yes.
Welcome, Trevor. How are you?
I'm great. How are y'all doing?
We're great. Thanks so much for being here.
Yeah, I'm so excited about this segment because this is probably the biggest determining factor on how successful you are in your investment portfolio. It's emotion. And look, right now is the perfect time to talk about it. The market's up again. We're well over 24,000. We just went 12 consecutive months with no negative months.
Yeah,
that's only
incredible.
happened 2 other times in history.
So, okay, what are some of the common mistakes then people are making? Because we just mentioned greed and fear. People can end up losing money if they try to play the market, right? And a lot of that is driven by greed and fear.
Right, yeah, so you named the 2 big ones. Right now, we're probably trending more towards greed. Bitcoin seems to be the hottest thing since the last whatever hot investment was. But remember, you don't want to play those emotions, right? Because that goes back to my first point, which is perspective. If you take any 30-year period, the market's returned about 9–10%. But if you compare that to an individual investor, they've seen 3 to 4%. That's terrible, and it's because they're reacting to the emotion. Buying at the top based on greed, selling at the bottom based on fear.
Yeah, well.
How do you ease the emotions, though? I mean, for somebody who is like me, who doesn't really, I don't really pay attention. I mean, I do. I don't want to say that I don't sound like I'm not paying attention, but it's harder for me to just put the emotions on the line or check them at the door. Like, what do you recommend you do at this time?
Yeah, so I think the viewers are tired of me saying this. Y'all might be as well, but have a plan. Focus on the long term, and if you do that, the short-term stuff shouldn't really come into play. One of my favorite quotes, I'm not sure who said it, but they said that the short-term volatility of the market, it's kind of like a junior high popularity contest, all over the place. But long-term, it acts like a weighing mechanism where fundamentals and earnings and the most important things become really important.
Can I ask you, Trevor, too, because a lot of people may be hesitant to, I know you have a lot of clients who, you deal with all kinds of scenarios.
Sure, yeah.
Some people may be hesitant to reach out to a financial planner because they assume it's going to cost them more money, and they think, my money is in a savings account, it's earning 1% or 3%. Over the long term, you're losing money because you're not even keeping up with inflation, right?
Yeah, no, I think that's a great point, and I've heard it described to me that besides maybe the dentist, the last person someone wants to call is a financial advisor. But what we try to do is make it very easy, and that first initial meeting is complimentary. So hey, come meet with us for an hour, and we'll tell you what we think, where you're at, what opportunities exist, and then if it's a good fit, let's go forward and talk about developing that financial plan.
And that's it. I love this next point, too. Manage your expectations. We've heard you say it before.
Yes.
And got to keep that in check.
Well, look, here's the deal. The Dow's at 24,300 or 400. We haven't had a correction since the beginning of last year. We're overdue. Doesn't mean it's going to happen next month. It may happen in 6 months. But when you know that a correction is likely, you shouldn't freak out then and be focused on retirement, education for the kids, and then you don't sell in a panic, which is the worst mistake you can make.
Yeah, and that, again, that is underscoring the fear element of the emotions. People are concerned that something's coming, they sell off, and then they lose out on all these potential gains, right?
Exactly. And I said in the beginning, emotion, not picking the best mutual funds, ETFs, index funds. Emotion is the biggest determining factor on how successful you're going to be in your investment portfolio and achieving your long-term financial goals.
And long term, I still think it's amazing that when you look at the numbers, as Trevor, you have taught us and you've said time and time again, 10% on average for many of your investors, that's huge.
It's fantastic as long as you don't panic or get out of the market or do the wrong thing at the wrong time. And what you're referring to there is that 30-year metric. 30 years in the S&P 500 index has shown 9 to 10% approximately with dividends, right? But if you're trying to time the market and outsmart the market, that's where you fit into that 3 or 4%. And think about the difference there. Long term, that's ultimately a lot of money, hundreds of thousands of dollars in difference.
And last question very quickly. Let's say someone's looking at the market over 24,000, right? Obviously, it's a huge number. You've mentioned a correction is coming. Should they invest now or should they wait, sort of gambling on the fact that the market could fall?
Right. That's a great question. You never want to time the market, but what I would recommend here is if you're retiring and coming into a large sum of money, or you got an inheritance, one strategy might be to take a portion of it and invest it, and take the rest and do something called dollar cost averaging, where a certain amount goes in every month, whether the market's up or down, and that way you're spreading your risk out, because we don't know when that correction's coming. But usually anytime you start to outsmart the market, you're going to be penalized. It's going to hurt long term.
Yeah.
Okay, great. Trevor
Thanks
Shakiba.
so much, Trevor.
Yeah, thank you.
And for more information or to start investing with Trevor and the Shakiba Group, visit their website, shakibagroup.com.
All right, so we have mentioned it, Sleeping Beauty. You may know him as Jay Peterman from Seinfeld, or perhaps as the host of Family Feud. John O'Hurley, of course, is who we're talking about, and he is in town right now.
He is performing in Houston this month, and reporter Steph Gonzalez has the inside scoop.